So you use the best available data, starting with audited financials, but supplementing with other credible info if needed to keep the review current.
That seems to be the practical approach outlined, yes. A mix of official data and informed estimates when necessary.
Okay, so let's try to pull this all together from our deep dive into your sources. We've covered quite a bit.
We have. It's a multi-layered process.
Yeah, first checking the company's basic activity, is it permissible? Then looking at its financial structure, those 30% thresholds for interest-based borrowing and deposits relative to market value.
Right. Then scrutinizing the income, that 5% limit on prohibited revenue.
Followed by the investor's duty, the requirement to purify your share of any prohibited revenue identified.
And on top of all that, the rules about how you invest, avoiding prohibited trading methods like margin trading or short selling.
And finally, the need for constant vigilance, that periodical, even daily review using the latest available data.
It really paints a picture of a very thorough, ongoing assessment process described in these AAOIFI standards from your sources.
Absolutely. This deep dive based on the material you provided gives, I think, a pretty detailed roadmap for understanding what Sharia-compliant share dealing entails according to these specific standards.
It definitely lays out a clear, if demanding, path, which brings up a final thought maybe for you to consider.
Go on.
Given how fast financial markets move and how companies are always restructuring, merging, changing, how does that requirement for continuous, maybe even daily review practically impact an investment strategy? If you're trying to adhere strictly to these detailed standards, that constant monitoring adds a significant operational layer, doesn't it? Something beyond just the initial stock pick.